Ladies and gentlemen, welcome to today's update call on BV Entrepreneur Swiss Small and Mid, a Luxembourg-registered UCITS fund with daily NAV. My name is Swiss Steiner. I'm with Bellevue Asset Management Zurich. Today is Wednesday, 13th of May, 2020. Today's update call is with Birgitte Olsen. She's the lead portfolio manager of our BV Entrepreneur Strategies. Birgitte is managing the fund with 25 years of professional investment expertise. Entrepreneurs are owner-operated and family-owned businesses that have demonstrated to be more steadfast and innovative, especially during times of crisis. They do not think in quarters, but in generations. The fund is focusing on companies with strong balance sheets and leading market positions in their industries. I'm therefore very happy to be able to say that it managed to significantly outperform versus SPI on a year-to-date basis. Having said that, I'm excited to hand over to Birgitte and listen firsthand to her insights.
Thank you, Phil. I'll start today's comment and updates on the BV Entrepreneur Swiss Small Mid by focusing on the market environment of Swiss small and mid caps as measured by the SPIX index. And I brought you a chart on the 5 years relative performance comparing the SPIX with the large SMI index and with Nestlé, which is a big part of the SMI index, and as you know, a very defensive, the symbol of defensiveness in Switzerland and worldwide, by the way. And what we can see here is a period of great outperformance of small and mid caps in 2017 to 18, and actually quite a nice phase of growth in 19 as well. Reminding you that we had this phase of exaggeration in performance in Nestlé with a peak in September. And 2019 was a year where both the SMI and the SPIX grew 30%, while Nestlé at the end of the year was up 31%. Now in this new COVID time, we had a severe derating phase at the beginning of the year, which lasted until March 18, where Nestlé lost just 10%, the SMI lost 21%, and small and mid caps in Switzerland lost 28%. What has happened since then in the rebound is that the SPIX has managed to outperform both Nestlé and the SMI, and is behaving like we would expect them to behave. This environment reminds me a lot of 2019 in terms that monies and investors have flocked to defensiveness in the face of the crisis, and Nestlé is just 3% below its high, whereas small and mid caps have a lot more to regain. We are focused on small and mid caps, but just not any small and mid caps. Small and mid caps, which are net cash most of the time and have very strong balance sheets. And they are very flexible and defensive in the face of this COVID-19 adversity. I think they have potential to perform and to outperform the broader markets again. Now, what are we doing in the strategy and in the portfolios? First of all, in terms of a principle, it's not time to compromise on quality. We continue to focus on companies with super strong balance sheets and positive cash flow generation. We've had the phase, we've passed the phase of panic where everything fell like a stone, where we went really defensive, increasing also the liquidity and the cash position in the fund, and are now in a second phase where you sort of try to judge the potential of the next 6 to 12 months, where you reactivate your watch list and try to take profit on relative winners, and the cash levels are now more or less working cash, which means 3 to 5%. We are actually, as the COVID develops and we society opens up again, we can continue in this phase two to see a third phase of stabilization in markets and GDP growth, but it's too early to call yet. So we are now sort of evolving between a phase two and a potential phase one again, in case we have a second wave of COVID cases and a more difficult economic growth scenario. What we do today is really to activate our network, to call companies and managers and to discuss what can be possible development, both in terms of demand situation, in terms of the profitability of the company, and in terms of the cash flow generation. Critical issue is to find out if the demand patterns we see today are just COVID related, if they are structural, if they can continue after the COVID, and what sort of shape we could see in the recovery. Now, I think it's a time where you have to ask from your fund manager to generate alpha out of active portfolio management. It's now the time to be able to show that active stock picking is better than the broader index. If I continue with a few case studies, a few companies which have been very resilient in the crisis. This slide is called Logitech Pandemic Tools, today and thereafter. Logitech just came out with their Q1 results yesterday. It's a long-term darling of ours, part of the top 10 in the fund. And it's seen an acceleration in the sales of video collaboration tools in webcams, 60% plus 30% in their Q4, which is our calendar Q1. Even the old keyboards are regaining demand interest as people need more tools to adapt to working from home and on a remote basis. Most of the time, and we see it for other companies, you need a multiple of tools. You need a headset home, you need a headset in the office, and maybe you need a headset on the go as well. We think Logitech can continue to prove its defensiveness. It has a fantastic brand, a great diversification in terms of its end products. Gaming is today its biggest division. And we think earnings estimates are too low, both for this year and next year. So for us, it's a company, although it already has passed its low of its high, of February, it's a company for us that can continue to outperform with fantastic ROCEs of 45%, which makes it greatly defensive. Another one we've added recently is Software One. As consumers and companies, enterprises need more hardware, they also need more software. It comes hand in hand. And we've been watching this stock for a while. It's IPO'd last year and have now come to the conclusion it's time for us to step in. We've been observing competitors or similar companies in Europe, called Bechtle, Cancom, or Atea in the Scandics. We see that they're very resilient in this crisis. And we have now implemented a first position in Software One, a seller, a manager of software to enterprises, focusing on the small and mid-sized companies. And we expect strong growth and strong profitability improvement in this specific case. Another one we like and we still like is Zuhause. So Zuhause was our best pick this year, is up 46% year to date. One could think it's time to let go, but we think it still has at least another 15% to go. Then this crisis of COVID-19 has been a real accelerator for their business, as we all switch our consumer habits from from offline to online, sorry. Growth has been really good. In Q1, they displayed 16% growth. The target was 10. And we think this can continue as COVID-19 pauses and stabilizes. We think that those kind of habits, it's so much more handy, will continue. And like all online penetration in all other businesses like apparel, music, and so on, once it's there, it doesn't go away. We expect the company to be break-even this year, to have 1% operating profit next year. And we would expect them to be able to reach their 8% adjusted EBITDA quicker as penetration greatly improves. Now I'll turn to Swissquote, which we've also liked as well. And it's been with 35% year-to-date performance, also a very good performer, outperforming the space of financials in Switzerland by a great mean. And it's the same. It's a similar theme as to Rosa. It's the digital platform which is the interesting part. And Swissquote is also in a space where their strategies is starting to show effect. They're starting to demonstrate that they can grow assets under management in a profitable way. And the stock has been into a great re-rating because of this. We think it can continue as expectations are still very low towards their success for the next years. And comparing to the average financial company out there, it has a very good return on equity and interesting multiples. So it's a space where you can find growth within the financial stocks, which is not that obvious today with today's low interest rates. Now, if I look at the performance of the BB entrepreneurs, small and mid, we've repositioned this fund at the end of July 2019 with the ambition to be a real contender in the space of small and mid-cap funds in Switzerland, designed to outperforming the speaks. We're quite satisfied with the achievements so far, and both in the second half of 19, but also in this very difficult year 2020, we've been able to generate alpha above the benchmark, but also above the average of the peer group. And we've been a bit naughty, but we've made a small index of these of our main competitor. And you can see the names listed on the slide. But and this is really the target of our strategy, is to be able to outperform the benchmark and our peers. Here you see the relative performance as measured by Lipper compared to the 50, 60 small and mid-cap funds you will find in Switzerland. This is a rolling performance on a 3-month basis. And our goal, of course, is to reach the first quartile in a consistent way. Looking at our top 10, you can see that the top 10 is very defensive. You want to put everything in there which is mostly safe and mostly liquid. So there's a lot of healthcare in here, and there's a lot of tech, which are the two sectors which fared best in the wake of COVID-19. This top 10 is not really representative of our strong exposition to small caps. As these tend to be less liquid, we reserve them for the lower weights in the portfolio, 2–2.5%. So the Veledas of this world or the Compagnie Financière Tradition of this world, you will never find in the top 10, but they help us in the performance on an aggregate level. So we've been very happy with our top pick, Logitech. We've been very happy with Swissquote. We now think it's time, and it's new for us to put Sonova in the top 10. It's been together with Straumann, one of the healthcare stocks that has suffered the most in the COVID-19, as dental implants or the sales of hearing aids are slowed down because of confinement. We actually think that Sonova has the better cards to bring sales and earnings growth back on track. And we've now downgraded Straumann, which is not in the top 10 anymore. In the industrial base, we continue to like Huber+Suhner, which staged a great rebound in the face of 5G potential. And Schindler for its defensive, huge part of recurring income, service income with very high margins, we like as well. To make sure that you understand the positioning of the fund, I've brought you all the positions which we have in tech and tech similars, as well as healthcare. And if you put this all together, it's more than 40% of the fund. And those two spaces have shown great defensiveness in the face of COVID-19. Some of those stocks, particularly in the healthcare space, have re-rated tremendously, so that the multiples are now quite demanding. And today, the challenge for stock pickers is to try to remain disciplined and careful at the same time. The tech space has also themes like semiconductors, which we played with VAT and Inficon, have been really strong. And also software and services, tech services with Azul has been really good for us. Cyclical stocks, yes, but cyclical stocks we can only conceive with very strong balance sheets and specific earnings stories like Huber+Suhner and others like Gurit or Vetrofac, which we also have on our list. Now, to finish up the call, strong balance sheets is the best medicine. So I want to make sure you understand that yes, we do invest in small and mid caps, but the portfolio has a very, very strong quality characteristic. The net debt to EBITDA is negative, meaning that the companies on average are net cash, and they have an above average return on invested capital. So this very comfortable situation brings them a lot of financial independency, but also of strategic independency, meaning that these are companies that are able to continue to invest even in the crisis, able to innovate further, able to grab market shares. They were strong before the crisis, and they'll be even stronger after the crisis as other competitors lose market share and have to concentrate on fixing their balance sheet. With this, I wish you all the best and gute Gesundheit, as we say in German. And I'm happy to update you in another 3 months on the prospects and continuity of our outperformance in the BB Entrepreneur Swiss Small and Mid.
Thank you very much indeed, Birgitte, for those insights and for those interesting elaborations. Thank you to you too, as well, ladies and gentlemen, for your trust in Bellevue Asset Management during this demanding period. Also, despite COVID-19, we are happy to be here for you and we remain at your disposal. In case of any questions or feedback, we are looking forward to continuously interact with you. Take care and stay safe in the name of